Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. Hope everyone had a good weekend. We are back here Monday morning, and there was a lot of news today. There was some M&A, or some M&A is the reason Zynga is up here, but we're going to talk about some stocks that rallied into the close on Friday, some stocks making big pre-market moves today. I mentioned Zynga. SPCE is up big on the heels of the SpaceX launch over the weekend. Cody had some news. Beyond Meat had some news. Pfizer had some news on a Friday. So we're going to talk about all these stocks and more. We'll take your questions from our chat as well. All three of our chats, our YouTube chat, our Benzinga Pro chat, and our premarket.benzinga.com chat. As far as guests, we'll be joined by Michael Pachter at 8:35. Great day to have him on. He's our video game expert, and he will talk about the Zynga news as well as the entire sector. And then later on in the show, towards the end, we'll be joined by Jason Shubnell. He is the managing editor at Benzinga. He'll stop by for a few minutes just to say hi. I'll bring Joel on here. Joel, give us an update on what happened here in the Sunday night session while I try to unmute you. There we go. Nope.
Joel's probably muted himself.
There we go.
No.
That was on Spencer.
That was on Spencer.
Look at this.
Zoom was being buggy.
And I downloaded the new version, Dennis. You better do that too.
When did you put up the sign stop, Spencer, before Joel gives the numbers? When did you put up that sign, a random walk to the kitchen?
A few weeks ago.
I don't remember seeing that one.
Yeah.
That was a good one.
Thank you.
I gotta look at your screen more. There's some really good signs up there. This guy, he's pretty witty.
He's pretty creative. That Maryland.
I guess that's why he's the producer. All right, sorry to interrupt. I'm already interrupting
really?
you.
You interrupted.
It's 1 minute
it's
in
like,
the show. I'm already
4
interrupting
minutes
you.
in the show. Well, we got the same old week then. Market's going to go up and Dennis is going to interrupt. S&P futures, big old range, had to run up into the close and got really silly. Open lower over the protest. What other factors? China talking tough. I'll give you the pre-market highs, 55.25, but what we're going to focus on for the whole week is last week's high, 30, 65.5, 25 handles away, 24 handles away. You got to get extremely bullish if we take out that level. And on the downside, man, we're so far off the low. I would say mid-range maybe at 30, 31. Look for minor support. Crude in the red by only 4 cents at 34.45. Gold in the red by 460 at 1732.30. Silver up, man. Silver almost at 19, up 23 cents at 1873. Bitcoin up $120 at 9,590. And Triple D, did you have a good weekend? Did you get out to do some exercising, do some bike riding, something like that?
All kinds of good exercising stuff. So did a little bit of plumbing over the weekend.
Oh, really?
So with my dad there, so we were doing a little bit. We had to move a sewer pipe, so we're doing some digging and some plumbing. So lots of fun things here this weekend. I try to do a little bit of everything, but I'm not very good at it.
No.
My dad's handy.
Did an outside bike ride with Lisa, and we both took a tumble, and they were both my fault.
What do you mean? How'd you fall down? You're so used to riding the Peloton, you don't know how to ride a regular bike anymore? Joel, your stationary bike's getting you. You forgot how to ride a bike?
It was a little more difficult than that. There was an area that was roped off, a road that was being done. You weren't supposed to go on the road.
Oh, of course, he's off-road biking.
So
Joel,
I went
the risk taker.
Right. So we both made it there successfully. And then on the way back, Lisa's like, no, I'm just going to go on the sidewalk. So we tried to go the sidewalk. I kind of was like, no, I'm going on the gravel road. And I tried to hop a curve and I went down hard. And, a few swear words. And Lisa's like, well, I'm staying on the sidewalk.
Are you all right?
Yeah, just a couple bruises.
Lucky you got a doctor for a wife.
Yeah, and then she went about another 50 feet and the sidewalk ended and she went down.
Oh my God. You two got to stop. Get out more. You can't just
No,
stay in
it
your
was,
house.
we
You've
should have
forgotten
stayed off.
how to
Yeah.
ride bikes.
When it says no bike riding, next time I'm not going to
Follow the
ride.
signs. Signs everywhere. Signs. I won't start singing.
I don't know who that is, but we got a lot of news here. Let's
'Cause
go
my
back.
singing's
Let's go
terrible.
back to some of that action on Friday.
Okay,
Woo!
so we'll start with this somewhere completely away from the headlines here for a few minutes. End of the month. We talk about movement at the end of the month, and a lot of times you see big movement on the close. There's basically 3 times that you really look for big movement on the close, and it's the third Friday of the month, which is option expiration, the end of the month, and the end of the quarter. There's often fireworks. Sometimes they have some rebalances, but the scheduled ones, that are every, pretty consistent there. End of month, end of quarter, you sometimes get some fireworks. There was buyers at the end of the month here, something fierce. Check out the chart of Verizon from Friday. In the last 20 minutes, Verizon, VZ, stock that moves 50 cents on a lot of days, runs up over $2, over 2 points in the last 10 minutes on the huge buy imbalance. And it was a big one. I didn't write it down. I can't remember, but I was playing it. I shorted the close because I'm like, this is ridiculous. And then I was able to cover after hours. Same thing with Abbott Labs. Abbott Labs, ABT, running straight up on the close. I shorted the close because it ran up almost $3 just because of the big buy imbalance. So, and it's already giving back to over $2 over here this morning. So big moves. Sometimes these are just classic fades, and they seem to usually work. A lot of times, if you can pick them up, and I'm sure there were some traders playing it that way too, at 350 when that imbalance data comes out, and you see that big buy imbalance on it, you think this thing could run. And if you look at where it was trading right around 350 when that NYSE buy imbalance would have came out, the stock was trading around 55.5, close 57.38, so ran up $2. Huge moves. I mean, these are just simple trades, and that's the title of the show here today. Simple trades for complicated times. These are simple trades. We're just using the publicly available information to make trades off of. And when you see a stock, even like I play it the other way, which is kind of the safer way because you don't have to believe the data. Like sometimes you'll see a big buy imbalance and it won't go anywhere. Usually end of the month, sometimes they tend to be a little bit more, they don't pair off as easy. So you'll see, sometimes some movement on them. But when you see Verizon run up $2 on the close, or Abbott Labs run up $3 in the last few minutes on no news, it's usually a fade, and the fade trade worked there.
Why would they put that order in? I know I say this every time.
I don't know why. Institutions, just a lot of institutional money managers want to jockey the price around. Maybe they need, they want to own this stock for their end of the month reports for whatever reason, and they're going to get it. And
they
they're
had
going
a whole
at
month
it.
to buy
Maybe there's some, there's some jockeying around. I have no idea why you want to, throw a huge order to buy on the close, but they move. And you know what? These big orders, it's still, again, a lot of people believe it's just the bots that move price. The institutions control a lot of bots, and your institutions are still the big price movers. You get some big institution wants to buy a couple million shares of Verizon, it's going to have some price impact. It's probably going to move the price.
And then Abbott moved too, right?
Pardon me?
Abbott?
Yeah, Abbott had a huge move too. Look at the chart. Show those charts there. Can we show those charts, Spencer? Are you showing them?
Yeah, I had them up before. Here,
yeah, show the Abbott one again. So we're around $92. 92 and change, 92 and a half. And then by the close up to 95. So just incredible movement again. So there's opportunities here as traders, when you got this imbalance data, and you can get it. Ask your broker. IB has it. Some of your brokers have it, some of them don't, but you get the big moves. If you see, even if you don't have the imbalance data, you see these huge moves at the end of the month, or even on the third Friday, you can speculate it probably was a big imbalance that moved it. So a lot of times those are fades. So how I play it is I sell them on the close. So I put what's called a limit on close order out there, and that's going to give me the closing price. So when I see this big buy imbalance at 56, I'm going to throw out an LOC at like 57. If it wants to run up to, on Verizon, and it runs up to 57.38 and closes at 57.38, I get the 57.38. And a limit on close order only executes on the closing print if you can be executed. So obviously if I was 57.50 on my sell order, I wouldn't have got executed. But because I'm 57, I'm going to get the 57.38. You get the price improvement. You get the closing print if you're priced below where it's going to close. If you're selling it or selling it short, if you're buying it, would be the opposite. But that's the way I play it. I use those orders, the LOC orders. I don't like the MOCs. Some traders use the MOCs, and those are market on close, which means, you know, sell it short on the close or sell on the close no matter what. I never like to write a blank check, so I never like to send market orders. I use the LOC, which is obviously still similar. You just put a price in there saying designated for the closing print. I sold short a bunch of Verizon on the closing print. I was able to cover it 10 minutes later for 30 cents. Obviously, it's down 50 cents now, so it's down a little bit more, but I have to take overnight risk or anything. Abbott Labs, I believe I'm still short some of that. I covered some, but I did hold on to a little bit of it short, so which I should think about covering here this morning.
Hey, Dennis, can you just place an LLC like that through any broker, or is that?
It depends how your brokers. I mean, some of the rural discount brokers might not have those order types, and that's, you know, an argument to maybe, you know, once you get to a sophisticated level of trading, you probably have to have, you know, a little more sophisticated broker. IB has all these order types. Interactive Brokers has all of that stuff, and at IB you can offset. So some of them won't allow you to send an order after 350, but if you're pairing off, the NYSE will allow that, and if your broker allows it, then you can, you know, you can put it out there a minute before the close, because they're looking like what the imbalance is. It's advertising out to traders that, hey, we have a big buyer out here, help us out. Do you want to provide liquidity to this big buyer? Verizon run up $2, I will provide liquidity to it by selling the stock short to that big buyer. There's other, you know, if there's no speculators that come in to sell it short, Verizon could go way higher than that even. But the speculators come in, the high frequency traders come in, the prop traders like myself come in. You know, you've got retail traders that are savvy, that maybe are trading those strategies, that come in and provide liquidity as well, saying if they want to gap Verizon up $1 or, you know, run it up $2 before the closing print, there's a high likelihood that it's going to give some of it back. All probabilities. So that's the end of the month trade.
That's nice. That's nice.
It's fairly consistent. I've made money for 20 years trading those types of trades. So it's fairly consistent. The odd one follows through. If there's news on Verizon, you're holding it through the weekend, you always have that risk as well. So, you know, there's lots of things to consider.
Do you hedge those out, or you just go straight on?
No, usually I'll hedge it out with something. You know, you could hedge it out with an AT&T on a Verizon. If you wanted to, you know, you could look at the beta and say, well, you know, it depends on the market. But this market's so funny right now. It's hard to just flat out hedge out things just with SPY, because it's all rotation. We're seeing that rotation again here this morning, where you got the NASDAQ trading down, you've got the banks are trading higher. It's like the opposite thing again, where it's some of those value names, so-called value names, lower PE stuff, is starting to catch a bid, and you're starting to see some of the hiding places, which, you know, that trade came off a couple of days ago. This morning, you're seeing that trade go back on, where they're hitting the tech stocks and buying a few of these other stocks like the airlines and some of the stocks that were at ground zero. So this rotation continues. It seems to change daily. So if you can identify it early, sometimes an opportunity. If it flips, you got to be able to flip it fast too. So rotation's always, you know, one of my core strategies, and there's lots of opportunity there.
All right, talking
strategy. It's strategy session Monday.
Yeah, well, we also talking simple trades, and one of the first messages I had to Spencer this morning was protest stocks. Right, there's stocks that are gonna benefit from this tragedy. We don't like it, but we're just gonna point out the price action. And which one's moving the most this morning?
Well, I think ADT is up, although it's off the highs. But I mean, I was looking for news. It didn't occur to me. It wasn't my first assumption that ADT would be up on. I didn't assume anything was gonna be up or down because of, you know, these riots. It's a pretty cynical way to look at things, but I don't see any other headlines out there, so I think it's a safe assumption to make that ADT and a few others are moving off of the events of this weekend, which is unfortunate.
So, and not only ADT, Spinner pointing out as well in the chat, I saw him, and I was thinking it too, DGLY. You say your cop cams. Look at DGLY this morning. This is the play. This is the one that's going to move the most on it. It's up 68%. It was only $1 stock, but all of a sudden, boom. This was moving on Friday as well ahead of this. This trader speculating that these riots could get ugly. Look at the move DGLY had on Friday. That is following through here this morning. I will tell you, for the most part, usually these trades come off fairly quickly. These are 1 or 2 day trades. The riots start to calm down, and you start to see, you know, these stocks come back down to earth. probably when we look at DGLY a couple months from now, if the riots calm down, it's probably back at $1. So this isn't what I'm throwing my long-term portfolio, but I'm telling you, if you're savvy and you were thinking of it on Friday and you're like, this could get uglier over the weekend, you're making a lot of money on DGLY.
Did you see where it went to off the open?
No.
505.
Off what open? You mean that 4 o'clock?
The 4 a.m. open.
Holy mackerel. I see the chart now. I didn't even look at that. So this has come way off the highs. And this is important to tell you when you're coming in and buying something at 4 a.m. There is no liquidity out there. There's not a lot of people that are awake. There's not a lot of orders out there. So you start paying up, you could get burned in a hurry. I have no idea who's paying $5 for a $1 stock on DGLY, but that's just a recipe. You're talking about a stock that just got back 2 years of its losses because we got some riots going on. I'm sorry to the $5 buyer. You're probably you're down here now and probably never getting that money back. Don't chase. That's the definition of chasing right there. We keep telling everyone, stop chasing. Don't chase. AAXN, let's talk that one too. Did it do the same? How high did this one get, Joel? Because I can see it at 83. So it's trading up. I hope this wasn't like a $100 stock at 4 a.m.
No, this one's a little more interesting. It's AAXN, right?
Yeah, this is the old taser.
Yeah, 83 and change, and it's holding 83.40, and it's holding right in there.
This stock, though, is a bigger company that's firing on all cylinders. You know, this isn't like a penny stock. So this is a huge move for them, too. A 10% move is a huge move for AAXN. Obviously not getting the move that DGLY is because it's not a penny stock. But this is a move that, you know, you could see this move for a bet. I wouldn't be surprised to get some life for a couple days.
Still moving up.
But I don't want to buy it 10% higher. I don't want to chase. So then this, I don't think, you know, well, let's talk about the riots. You know, obviously, this got ugly here over the weekend, very ugly. It was ugly last week. You know, it's been ugly for a couple days. And now overnight, the market gets rocked on it. Well, that trade's already come off. When we opened at 6 p.m. on Sunday, S&P futures just fall out of bed. We're at one point down, I think, 35 handles. And we're all the way back up to the green. So you can see the market's already saying that, well, the market's so bloody resilient, it just ignores everything anyways. But that's why I don't want to chase stocks like this, because I don't think this is like these riots are going to continue for months here. Maybe I'm wrong. I'm hoping that's not the case, though. I hope that they get this under control.
I think that's what everyone hopes for. And I always get like, I think just trading these events is like a super cynical thing to do. I don't love the idea of like talking about the riot trade, right? Because there's more to it than just that. I think it's a purely capitalistic way to look at a gigantic social issue, but you can't.
That's our job as traders, though, is to make money off of events.
Yeah.
So I don't think we're being, I don't think it's being like anti-American to, speculate on these riot stocks. This is my opinion. I want them to end as fast as everybody else. I feel terrible for the people. Like, did you see that homeless person? Like and I think it was Cold that tweeted it out.
I saw
they grabbed his stuff, the homeless guy, and they burned it all.
Yeah, there's a lot of stuff.
Come on, don't do that. There's good ways. I'm all for protesting. I mean, this was a terrible thing that happened, and you want to protest in a civil way. You know what they were doing in Flint? There was some great. The police were out there saying, protest. It's all good. Just don't hurt anybody. That's the better way to go about it. But when they're burning things and hurting people and, looting stores, that's over the top. That's not protesting anymore. That's just taking advantage of the situation. So
Emily went down there on Saturday to cover, and I offered to go, and she said, "No, Dad, you don't need to go." And I'm like, "Okay," but we'll talk about it now, and we're just doing it because we're pointing out market action. I guarantee you, CNBC or Fox or somebody will be covering this in a couple hours. So, it's movement, and we just are pointing it out. But I agree with you, Spencer. Let's move on.
So what you can say is like there are implications to like Target and Nike and Walmart because they've had to close some stores. Now these aren't like someone asked me over the weekend. A buddy asked me if I thought like the markets were going to react to like the events over the weekend, and my first thought was like, no. If the market can shrug off a pandemic, then why would the market care about riots that I'm assuming are going to be over. Going to be over in a couple of weeks. I would hope. I hope
Yeah,
so.
you would
Right.
hope
So, what temporary closures to some stores? Like, why would the market care about that at all if it's going to shrug off a freaking pandemic? You know what I mean? So that was my first thought.
It cares in the short run, though.
I
It does
guess.
care in the short run because you're seeing these moves in these stocks, and you're looking at Target this morning, and Target is trading down again. A little bit of combo trade here for you guys. It had a run up on the end of the month too. So we ran up over $1.50 on Target. So it needed to come back in $1. So if you're saying, oh, the Target down $3 on this, I'll buy it. Target's really only down about $1.50 because really fair value for that thing's around 121 because it had another $1.50 of fluff like the Verizon and the other thing that I was just pointing out. So it's down, but it's not down as much as you think. But again, these stocks, I think probably get bought on the dips. I don't know how low Target got.
Let me see.
Let's see what Target did. I see a 109, but that can't be right. That must be a bad print.
Yeah, that is a bad print. Yeah, I don't know why they did that. I'm seeing that print too, Dennis, but I'm not seeing it
we
on
have
my
to go
chart.
look at the tape, but I think
Yeah,
that's a bad
that had
print.
to be.
109.
That was.
I would have been buying out there 2 hand. Like come to me, Target 109. Yes, thank you. I get my stock back. I'll take it back.
118. Let's call it 118.
Yeah, so it's off the lows. It's already coming in. Target, Walmart, we're all down this morning a little bit on this. Walmart's down $1. Target's down $2.50 from the close, which it had run up into. You said Nike too, Spencer. Did you say Nike?
Yeah, they had to close some stores.
They're up, so they're shrugging that one off there. I think Apple said they were closing a couple stores.
Yep,
too,
Apple too. Yep.
Apple's slightly down. Target was the one we saw getting looted. So I saw multiple videos of that.
Target's HQ is in the Minneapolis area.
So there you go. So Target's getting hit harder for that reasons.
But KP, it's just a quick question answer here. What is a bad print? A bad print could be like just a really small odd lot that
print outside the market.
Print outside the market, or it's actually a trade that happened. That wouldn't be a bad print; it'd be a good print. But there's a late print to the tape, something that happened on Friday, but they're posting today.
But again, because we see a 109, it didn't trade there on Friday, so I don't think that's a late trade report of the tape because Target's low on was 118.16 on. It didn't trade below 118 on Friday, so that's why if we go look at the tape, it's probably some outside print. It could be a trade through. There's a lot of reasons that you'll see a trade, but trades sometimes occur outside of the market, and they occur for different market structural reasons. The market is very fragmented. You got 12 or 13. I can't even keep track of how many bloody exchanges you have now, but I think it's 13 different exchanges trading stocks. You have off exchange market makers. You have dark pools. You have so many different places where trades are occurring that in some cases, sometimes a trade will just happen outside the market. That customer will often call and say, look, the stock's trading once 317, or the stock, sorry, I was looking at Apple, stock's trading 119. I just got printed 109. What's up? And there'll often be what's called an adjustment if the market deems that it was outside. Sometimes there's not, though. So you got to be careful with how you route the orders. If you're routing it wrong and you did your own routing, I mean, at a retail broker, it's a different story because the broker's doing your routing in a lot of cases, unless you're at like an IB. But if you're controlling the routing and you route it wrong, that could be on you. Like if I route an order outside the market using a different type of order, there's different ways you can do that, and I get printed outside the market, it's probably on me. But I'm a prop trader, and I'm supposed to know what I'm doing with the order routing. So when you're controlling your own order routing, it's a different story.
Also, this one's kind of easy, and I don't think there's option assignment when it show up like that. Someone just wanted to do something at 119, and they put 109 in.
That could happen.
That's what
handleitis.
Yep.
But sometimes at 4 a.m, like when you're seeing this DGLY trade up to $5, it's not outside the market. It was probably the market was there. We see multiple trades up there. That's just people too excited, buying it too early in the morning, thinking they're getting ahead of it, and they think this thing's going to go up 1,000%. They're not thinking clearly, obviously, because a penny stock, $1.12 close, probably not going to $5 on this. So if you're up and you're savvy and you're shorting it up there, and I don't know how easy the borrow is on a DGLY. Sometimes the penny stock borrows aren't that easy, but there's obviously some opportunities. But at 4 a.m., you got to kind of know what you're doing, because if you're just coming in and randomly buying and taking the offers, you could be paying a really bad price.
Dennis, you haven't mentioned the after hours players that like the handler or the penny jumper, or
well, the penny jumper algo is there all the time. So after hours, you're sitting there and there's no market on something. If I bid 50, it bids 50.01. The algo's right there immediately. Like I'm 50, I don't even see my bid. It's 50.01 ahead of me. So if the stock closed at 51 and I bid 50, I'd say I would be willing to buy the stock at 50. It bids 50.01 ahead of me. So in case somebody sells it, the algo gets it. That's your high frequency penny jumping program. It's a tough one to beat. I go 50.10, he'll go 50.11. I go 50.50, he'll go 50.51. Oh, 50.75, he'll say you're too high and you can have it. So because you're only 25 cents down and you get picked off on news, right? So that's the penny jumping algo after hours. That's in the pre-market too. You see that happen a lot. You see it happening during the day too, but it's not as prevalent because the markets are tighter, right? So you don't see it as much. But when you get into these widespread markets, everybody wants to be at the top of the order queue for execution. They want to try to make the spread. The market makers, high frequency market, are mostly market making programs. They want to make the spread. So you got a 50-cent spread in a stock, they'll want to be right at the top of the queue. So if somebody comes in to buy it, they sell it. Somebody comes in to sell it, they buy it. So that's what market making is. It's sitting at the top of the queue. And there's, market makers will jump each other. You'll see situations where you get two algos jumping each other and the quote will change like 6,000 times a second because they're sitting there jockeying for, execution. They go 01, 02, 03, 04, 05, 06, 07. The one gives up and then it brings it back down to 01, 02, 03, 05, 05, 06, 07. And they'll call it quote pollution or something. Sometimes it's just a loop where the two algos are getting caught together. You see all this fun stuff in high frequency trading. It's a whole different world.
And then the one I was referring to was the handler,
There used to be a program, dirty as hell, that would automatically, if the stock closed at like 10.50, the bid 9.50 and the bid 11.50. And they're hoping you don't look at the handle and you'll accidentally hit them, at the wrong handle, which is dirty, dirty, dirty. That's a dirty program. I guess it's legal, but that's really dirty. If you're throwing out the opposite handle, or it'll be like close, like better examples, like it closes at like 25.76, so they'll bid 24.76 and they'll hope, oh, I want to sell it flat. I was like, oh my goodness, I hit a handle. I've accidentally hit it before because I'm like in a hurry. I was like, oh, there's a 76 bid, I'll hit that. I was like, I hit the wrong handle. I used to joke with you, Joel. Remember, you'd like, I hit the wrong handle. I call you handleitis. Or Joel starts talking the wrong handle.
Yeah, exactly.
You start talking the wrong handle. I mean, look, after hours in pre-market, you got to look, and the handle is the number before the decimal point. So you got to look really close and make sure you're hitting it at 25.76 and not 24.76. I haven't seen that program out there, so maybe somebody, got on there and like shut it down because it's really dirty. That was like, so I haven't seen that for a while. And I trade a lot of pre-market after hours, but there was like an automatic program that was doing that for a while. It was a few years ago. But anyways, I was like, that is such a dirty program. Dirty, dirty, dirty. Probably legal, but dirty as hell.
All right, let's talk about space. That's what everyone wants to talk about this morning. The successful launch.
Did you guys watch it?
No.
No.
Did you watch it, Dennis? You're into that Star Wars kind of stuff.
Star Wars.
It's not Star Wars. Anyways, let's talk. I watched the landing of the rocket, though. I did see a video of the landing of the rocket, and that was really cool. The 30-second video that was flying around on Twitter of landing on that pad. Man, that's cool.
I didn't see
some
that,
wicked stuff, man.
I watched the launch and then I watched the docking into the ISS yesterday. It was really cool stuff. Really cool stuff.
Yeah, the docking's neat too. It is really cool stuff.
Yeah. So anyway, we thought this could be a trade last week, and the launch got delayed a couple days, but I guess it's a trade this morning. Space is up.
And we got to give you props on this. You're all over this, Spencer, the space trade. He kept talking about it. The stock was trading at 16.5 when you originally talking about it. It's now 18.30. You were just saying, this launch is coming, and, this will give, some headlines talking about space. And right away, people think, let's, what space stocks can I buy? Because this is getting headlines. People, it's simplistic trading. And again, the title of the show today, which was great by Spencer here, simple trades for complicated times. And just thinking simply and saying, hey, if they have a successful launch, Tesla, which has absolutely nothing to do with, with that company, could get a lift on it. I think you were the one or somebody else was even saying that. It's up 19 points here this morning. It's not on Tesla. Company's nothing. They're separate companies, SpaceX, but Elon Musk controls both. So they're like successful launch. Good for Tesla, I guess. And Space SPCE, obviously direct beneficiary, really in the logic of it that, more people get interested in space. This is a business that's going to try to capitalize on that. So launching people into space successfully, even if it's from a competing company like SpaceX, is good for SPCE. So I guess you had risk. I mean, if the rocket was unsuccessful to launch, then the stock could potentially go down, and we don't want to think about that. So there is a risk involved in that trade, but successful launch, it's good for SPCE. So those buying it on Friday are being immediately rewarded today.
pre-market high in space. They got it to $20, and then it's back down at 18.30.
Okay,
So
that's unbelievable. Again, I don't know who's coming out here. What time was that?
right off the 4 o'clock open.
You got to watch these 4 o'clock. You can waking up at 4 a.m. to buy stocks that you think are going to be hot. Don't pay up 100% for them, or 200%, or 300%.
Hey guys, I want to interrupt you for a second. Gilead just came out with some data. They announced results from the phase 3 trial of remdesivir in patients with moderate COVID-19. And the study found a 5-day treatment course of the drug resulted in significantly greater clinical improvement versus treatment with standard of care alone. So the drug appears to have helped over a 5-day treatment course.
You would think that would be good news, but the stock is going down. It's down 2 points on it. So
now it is.
Now it is. It only came out a minute ago, so we've only been out a minute.
Right, and it popped on the headline. Is what I'm saying.
Did it?
Did it?
Yeah, it did. Really quick, Dennis. It did.
Where'd it get to?
Oh, you're $80, 80.37.
Again, this is news algo getting killed here on this. So the news algo is sometimes good, sometimes it's wrong. And here's, this is a good segue and go to another little pet peeve here this morning that I see. But I saw a Reuters article coming, and they were talking about Gilead, and they were talking about, man, is Gilead getting rocked here right now. That news algo just bought $80, is now down 6 points already. $73 here now. Gilead, it's down $7 here from where that just was right after the headline a minute ago. So these things are wild. But it was a Reuters article saying, it was pointing out some big option buys ahead of the SEC approval for remdesivir back in May. I think it was May 1st it got approved by the SEC. But they point out, and they can cherry pick, okay, here's a big buyer, and they made $1 million or 1.6 million or whatever it was on the options. One thing to consider is, though, not every option buyer has inside information. Just because they correctly guess the right way doesn't mean they have inside information. On Gilead, we all knew there was going to be multiple headlines on remdesivir coming in the next couple of months. Joel and I were playing it. We were like, I think the headline's going to be good. This was back in April, because they had already knocked the stock down that they didn't think the drug was doing something. So I thought the bar was very low. And obviously, we made money off of that. We're not inside information. We're just using the publicly available, and thinking it through. So I don't know if that person had inside information or not. We don't know who that option buyer was, but I'm saying the likelihood that they did is very, very low. So just speculating that every single option buyer that has inside information, that they're always right. On a stock like Gilead that has multiple headlines coming, there's going to be speculation on both sides. Like you were saying, it could have been a hedging trade, Joel. It could have been a lot of different reasons for that. My point being is that I just don't think that every option buyer that you point out has inside information. Some of them definitely could.
Should we get Tesla in here real quick? I know we got our guest.
I think we got to talk with this Gilead for a minute. I don't think we can go to Tesla. Go ahead. Because this is knocking the market down too right now. We just knocked six handles off the S&P.
Wasn't the
that is not coincidence.
Was it good? Was it good?
Well, it doesn't appear to be.
I'm sitting here trying to.
We don't know.
It sounds good to me. The studies demonstrated patients were 65% more likely to have clinical improvement at day 11 versus with those with standard of care. So the two headlines I read both sound okay. I'm not, I guess, informed enough to interpret these headlines and interpret the move, but they sounded good to me. I'm not really sure. I mean, we're basically back to scratch, aren't we?
This is just wild. And trading these on the headlines it's tough game. You don't know how they're going to interpret it. It reads to me, Spencer, like, oh, that looks like a good headline too. It reads to me that the same way. But here they are. They buy it off the hop in the first seconds and then they slam it. They slam it down to 73. Headline trading is, and I do headline trading, but when you got a little bit of, gray in it, those are hard headlines to trade. When it's just black and white, sometimes those are the easier ones. Like, stock, has a big insider, buy come in. Like, I mean, from the disclosures, that, the SEC, the Edgar filings that, hey, Warren Buffett bought some stock, or, a hedge fund manager. Those are obvious ones that's going to move the stock in the up. It's going to move it up. But when you get data from a drug, sometimes it appears to be good, and a lot of times, sometimes it'll spin the other way. So you got to be careful on that stuff. So just randomly coming in and buying, just because it looks good, We know Gilead has popped before on, good data and sold right off. Well, now they look just like they're just selling it off on good data. So
This is
I don't know
also
what that
such
means.
a recycled headline. I mean, how many times?
So how many times exactly?
Yeah, yep. And
Great point.
Yep, and it's actually peaked every time at lower levels when this news has come out. So 6 of one, half dozen of the other, and also now you're trading it. Got a little more competition, right? If you're after hours, maybe there's not as many people. I think pre-market, I think you get a little bit more participation. But we're a minute late to bring in our guest here, and what timing by me to have Mr. Pachter on today with the Zynga acquisition.
Oh, yes, Joel. Great timing. Michael
How
Pachter.
do I do that?
I don't know how you do it, Joel. Michael Pachter from Wedbush Securities. Michael, welcome.
Welcome. Oh, thank you for having me. And Joel, your timing was poor because I didn't get a chance to run a brush through my hair.
Oh, we got you on video. Yes. All right. I keep asking you, and
there we go.
Mr. Pachter is he's out on the coast out there, so he's very nice for us to get up early in the morning.
I'm in Riot Central here. I'm in Long Beach, so pray for us. Yeah, that's probably 3 or 4 miles from my house.
Michael, you just got off a call related to the Zynga headline. Is that correct? So actually,
yes.
before we talk about that, let me give the news here. Zynga is making their biggest acquisition to date this morning. They are buying a Turkish mobile gaming company called Peak for $1.8 billion in cash and stock. And Michael, you just got off a call about this. What was that about?
Yeah, it's half cash, half stock, so right. should be pretty accretive. The stock is valued at their VWAP for the last couple of months, so it's $7.92 a share. Stock's in the high nines, I think, is trading up in the pre-market. So they're giving away. They're paying 113 million or so shares of cash, and stock, and 900 million of cash. Which means it's probably going to be closer to a $2 billion acquisition. Anyway, these guys, they make 2 big games, Toon Blast and Toy Blast. They're both consistently top 20 titles. The company is a Turkish-based, Istanbul-based developer. And so the games are pretty popular globally. They do really well in the US. Zynga didn't add anything to its guidance for the quarter, so they're assuming it's going to close, June 30th or later. And they said that the second half contribution would be $300 million. So 600 million annualized run rate for the games. Knowing Zynga, if they say 300 million, that's probably the average, 600 million, my bad. Yeah, 600 million annually. So probably 150 million a quarter is the average of the last several quarters, and there's probably some upside there. No commentary on the profitability of those games. I will say I play a lot of mobile games. These 2 games, Toon Blast and Toy Blast, advertise a lot, so user acquisition is probably pretty high. But bottom line, Zynga is doing 20% EBITDA margin, so these things will contribute probably at least 120 million a year. And given Zynga's history, they're probably not paying 15 times EBITDA. They're probably paying something closer to 10. So I think the EBITDA is going to be pretty high. Good for them overall. Really.
And they're also raising their Q2 and fiscal year sales guidance this morning, just in relation to the deal. So
no, not the deal. So the increase has nothing to do with the deal.
Okay.
The increase is 40 million for the quarter, no peak whatsoever, and the full year guide is 40 million only and no peak whatsoever. They just separately said peak should add 300 million in the second half without a comment on EBITDA.
Got it.
They're over 100 million in EBITDA this quarter without peak. And so if peak is, generating 20% EBITDA margins, probably another 30 million or so per quarter. So they should come in close to 500 million this year in EBITDA. That's pretty good.
Got it. So where does this leave Zynga? I guess as the dominant player in mobile gaming, right?
Yeah, I mean, they're the dominant Western player. Tencent is a multiple of their size, so pretty big. I think that, you look at companies like Electronic Arts who have been in mobile earnestly since their 2006 acquisition of Jamdat, and EA is doing around 700 million in revenue this year. You look at Zynga, their guide is 1.84 billion without this 300 million contribution from Peak. So they'll be over 2.1 billion this year. They're 3 times the size of EA, and they started up, 4 years later. It kind of shows you that a company totally focused on mobile can do really, really well. And a company that's trying to do a little bit of everything just has a more challenging time building up its business.
And what's your price target on Zynga?
Well, it was 11, and I'm in the process of writing a note, but your good fortune is my bad fortune. I scheduled this interview in the midst of all this, so I haven't yet written a note. So I cannot tell you what it's going to do to my numbers. I haven't figured it out yet. 11 as of Friday, and again, it's under review right now.
And Michael, what about the rest of the gaming stocks here? I mean, they've been like, what can you say about them? They've been on fire.
Yeah, I have a note out this morning about this. I wrote a several page note, probably 20-page note. Glue pre-announced last week. Zynga essentially pre-announced today. The raise and guide, the 40 million raise is on a 460 million base. So Zynga is raising by, call it 8%. Glue raised by about 8%. Each of those numbers implies a sequential increase of, roughly 35% on their core in-game purchase business. So anybody with in-game spending is going to benefit as long as we're shelter in place. And I think that number is about 35%. So the way to really think about these guys is, look at Activision's revenue, look at the percentage that comes from in-game spend. It's about 2/3. So 35% times 2/3, they're getting about, 20-25% lift, sequential lift in revenue just from shelter in place. EA and Take-Two are about 50%. So 35 times 50 is about 17% lift. Ubisoft's about 25%. Nintendo's close to zero. So you can kind of, work it through. And the right question is, two questions. How long does shelter in place last? And whether there's any portion of this increase in sales that is sustainable. Notwithstanding what our president has said, I don't expect a vaccine to be widely available by year end. The trick on vaccine is not just proving them out. They got to manufacture, 5 billion doses. So we're really probably talking about April to September of 21 before we're fully ready to go back out. So I think this lasts for a year minimum. And I think we're probably talking about, maybe 15, 18 months of some kind of modified shelter in place. Second thing is a lot of people are coming back to these games. And what we're hearing consistently from all the publishers is that what they call lapsed players, people who used to play their games who quit are coming back. So, when you think about new players for these titles, they aren't necessarily your mom who's just started playing Call of Duty. You don't have to worry about that type of player. It's really the 20-year-old who got a job at 22 and stopped playing Call of Duty, and he's back. And I think that's sustainable. I think you're going to see a massive shift in work patterns, even after shelter in place ends. You've seen Facebook and Twitter saying, stay at home as long as you want, including after there's a vaccine. I think my firm is considering letting people work from home. And I've talked to several employers who are saying they're just going to modify schedules. And if people want to come in the office 1 or 2 days a week, they will. That means we have a lot more time to play games, less time commuting, more time to entertain ourselves. So I think that at least 10 points of this 35% lift due to shelter in place is sustainable. I think these guys are all worth at least 10% more than they were before, and they get massive leverage on that increase in revenue. So I love the sector. I think it is sustainable for a long, long time.
Kind of like that unidentified catalyst that you were looking for. The stocks got hit and they were already on their way back before this happened, but a major catalyst. So, you expect the move to continue. I want to ask you about eSports and, that evolving, and eSports betting obviously is another factor that's going to be very important. Look at a stock like DraftKings, other stocks, but and I don't know a lot about this, but I mean, is there gambling aspects to e-gaming? I mean, could that be a whole nother thing?
It can be. It's going to end up being the way betting on college basketball was in the early 1950s. And I don't know if you remember the CCNY betting scandal. You guys probably weren't around in 1951. But a lot of players were charged with fixing games. And it was because, it was largely unregulated, and college basketball was kind of not a big thing back then. And so people were making money by paying off players. And you have to worry about that with esports. I think that the players they don't make very much money. They'll be susceptible. So I think it's going to evolve very slowly. I wouldn't throw DraftKings into that, and I don't cover them yet. I intend to. DraftKings is daily fantasy sports, so you're actually fashioning a real pro sports team. So you're picking a wide receiver and a quarterback and a running back, and then see how their stats shake out against other people who do the same thing. That's different. That's professional sports that you're betting on. Esports is a big deal, but we don't yet have a killer app. We don't yet have a game that everybody wants to watch and everybody understands, like basketball, where everybody, if you say LeBron James, your mom knows who LeBron James is. Like, everybody knows who he is. You can't name an esports player. Your mom probably hasn't heard of Ninja, and he's not even an esports player. He's an esports broadcaster.
Michael, any upcoming catalysts we need to be aware of as far as where we are in the console cycle or conferences, E3, or I'm not even sure what the status of that is this year. But
yeah, E3 canceled.
Okay.
Console announcements starting this week. Sony's got an event this week.
Okay.
Who knows what they're going to say. Consoles have historically been a catalyst and have moved the needle. Typically, when that was the only way to play games, it was a good indicator of sales. So if people bought a lot of consoles, they were going to buy a lot of software later. That's just not the case anymore. As I said, Activision, 2/3 of their revenue are from in-game purchases, and $2 billion of their $7 billion of revenues Candy Crush alone. So it's not as console dependent as it has been in the past. I actually think that you have competing technology this year. You're going to get streaming ramping. So Google Stadia is a streaming service. I am confident Amazon's going to announce something similar. I think Microsoft's going to announce a streaming service. I think Sony eventually will. Apple might. So you're going to get a lot of players trying to get people to buy games without buying a console. And that's great for the publishers. Think streaming video movies without, actually having a cable box. And if there's no equipment required, more people are going to access the content.
Two quick follow-ups. One is, would you expect Sony to be volatile ahead of that or after their announcement?
Yeah, again, I don't cover them, but I'm sure that they are. I mean, gaming is more than 25% of their profits, so I'm sure that's the case.
Second thing, I don't know if you cover Nintendo either, but I've been trying for a month and a half now to buy a damn Switch, and I can't because they're all out of stock everywhere. The supply chains are all screwed up. When will I be able to get a Switch for not $500?
My understanding is they're actually back down to earth.
Okay.
You can check eBay prices will tell you, but they've lifted shipments by a bit. They only increased by 10%, but clearly that's just parental guilt and people stuck at home wanting to do something.
I'm not spending double. I'm not paying double for one of those things. All right, Joel, I believe you had one more.
Yeah,
thing.
just one thing, Michael. We fail to mention every time you come on about the Pachter factor. So I know people enjoy your content. Could you just tell people about when that is and how they can listen to it?
Oh, good question. It's available in a bunch of different places, and it's on demand. So it's not there's no formal dates, but pretty much daily. I think we do it probably 5 days a week. There's a website called sifted.net, and you can be a Patreon patron. I don't get any of the money, but it supports the production of the show. If you don't do that, it's on Twitch, and all we ask people to do to get it real time on Twitch is link their Twitch Prime account to their Amazon Prime account. And then finally, it's on YouTube for free for everybody, but we delay the release a week. So if you go to YouTube, there's 200 shows there. And I talk about games. So it's all Q&A. I answer viewer questions about games. Happy to take any questions from anybody in this audience. So YouTube's the fastest way to do it. And follow me on Twitter at Michael Pachter and give me grief. I don't reply to anybody who doesn't follow me. So if you don't follow me, you're not getting any engagement.
That's a good policy to have. Michael Pachter, Senior Equity Analyst at Wedbush Securities, host of the Pachter Factor. Thanks for getting up early with us, Michael. We appreciate it.
Of course. Thank you.
All right. 8:50 here now, guys. Our Jason Shubnell will join us here in a couple moments. But
sure.
Well, let's go back to markets. Dennis, what are you seeing out there? You've been off the quiet.
Rotation, a lot of rotation. The banks are stronger here this morning. Like I said, the airlines are trading higher. You're seeing definite rotation. And we know this can change in a hurry, but You're seeing it going into those laggards again and coming out of the tech stock. So the NASDAQ is now down. QQQ is now down $1. So you're definitely seeing rotation. It's going to be a really tricky day. Gilead has come all the way back. I mean, that stock really, I was watching a lot of that action.
Yeah.
It obviously, we got the big pop on the initial headline, which lasted a couple seconds. Then we had the huge drop where like, oh, somebody who's bought it is like, I've screwed up, and they've sold it all the way down to $73, and now it's right back to 76.30 and 76.81, and kind of not even even as volatile as it was. So I think the range today, if you look at the pre-market ranges in for Gilead here, crazy movement. These headlines are wild.
S&Ps did sell off on that, but just making a home here in the 30-30 handle. Friday's close, that's been the high close of the rebound, 30.42. And then we had a couple other pesky closes right here, 30.38 and 30.35.5. So a lot of decision back and forth here. I'm looking for us to hold this area to get up to test that 65.5. If we can't catch a bid off this area, not sure if we'll see that low or Friday's low at 92. That would be 29.92. But we're basically trading a triple close area. Let's just cover Tesla. That's benefiting from the SpaceX launch, correct?
Yeah. And the technicals look good too on it. I mean, we talked with Jason on Friday, and the technicals look good. I mean, the valuation to me has never made sense, but it doesn't matter. This market doesn't care. It's the story. The story is still hot. It's got its following. I mean, I don't see any reason. I said it on Friday. I think it's probably going to go to $1,000. Why not? Why not? So I don't know if 2,000, like Jason was saying, seemed a little bit of a stretch, but who knows? I mean, these things can go for a long time. So it's breaking out here again. This is breakout from consolidation station. If I was trading it, I'd be a buyer of pullbacks.
This is at the top of a trading range here, and we've been in a long-term trading range, and 869.82, that's been the high of the range. So look at that. Your pre-market high comes in below that, 865. So that's a real big area. We've been in that trading range since, I think that was earnings when they did that. That was back on April 30th. I mean, just like the only thing with Tesla, and Jason got into it a little bit on Friday, to me, they're going to have to make their money somewhere else besides buying cars or selling cars, because
Jason thinks the batteries.
It is the batteries. It's got to be something else, because I see, and I know we've run over this, I think in the next 5 years, 10 years, there's going to be a lot less cars on the road. And I don't know if all those cars are going to be Teslas, because Tesla is very expensive, but I don't know. I mean, it's going to be the batteries or the solar, but I just see, the cars on the road in 5 years being, I'm just throwing numbers out here, 10, 15% lower, in 20 years being 25% lower. I mean, I'm done. I'm done with cars. I mean, who needs them? Who needs the insurance?
Well, we still need cars.
Who needs cars?
That's a bold statement.
He's
Joel,
living in the
I
motor
agree.
city.
There's going to be less cars on the road.
A lot less cars.
With even what's happened recently, and you think about how efficient the world still was when we were in lockdown, there's a lot of argument there that there'll be more working from home after this, and that means less commuting. It means less cars. I mean, if you're in the city, it's a different story, but there's a lot of people who commute, that from, into the city with their car. We know there's traffic jams coming to Chicago and to Detroit. There's a lot of people commute. It could be less. So there's an argument there that there will be less cars. The difference with Tesla is it's about, like, if you looked at this as a car company, the valuation makes absolutely 0 sense. So
but it's never been valued like that.
It's never been valued like a car company. It's not valued like a car company. It's not $100 billion car companies out here. So, you got to look, and the guy is a genius. The stuff he's doing with SpaceX is a genius. And if you're buying Tesla, you're basically, it's a play on Elon Musk's idea generation. And he comes up with a lot of ideas, and that's worth a lot of money.
All right, let's hang out with someone, a familiar face here for the next.
Can we just be? We're going to bring on Shubs, and Shubs is there. But this, we've had multiple people ask about NERV in the chat, and I said I'd cover it.
Sure.
So just we can stay on later.
NERV. What?
Yeah, Minerva Neuroscience, because it got rocked on Friday.
Oh my goodness!
So this was a stock that did not meet. So their schizophrenia drug did not meet the primary endpoint phase 3 trial. Stock murdered on Friday. It's bouncing back here a little bit. Typically, these things don't come right back unless there's like unless there's something with the trial, all of a sudden, that comes to life again. That doesn't usually happen. So from my experience, I don't follow the story at all, but from my experience, when you're buying these things on the dip, they tend to not be that good. They tend to continue to leak. And, a lot of these companies are one-trick ponies and the drug's not working out. Yes, sometimes they can, find another way to, tweak it and, and re-put it into a trial. But for the most part, when these things get rocked like this, they don't bounce right back. So that's just my thoughts on NERV.
Yeah, I mean, it had a big range yesterday. It is green right now. It's quiet. So if it's, if it stays green, that's, 24 cents, maybe make a run at the high from Friday, which was 550. Don't really see that, nor I really don't see it falling back to that $1.81 level. So maybe just get a couple days of consolidation, maybe some news for the company or an analyst comes out to defend it. But be keep an eye on that closing price at 371. Try and be bullish above it. If it loses that, kind of hard to find a stop in there. Big volume in it on Friday, though.
All right, Jason Shubnell is Benzinga's managing editor. He also goes by Shubs. Bring him on now. Good morning.
Hey, good morning, guys.
How's it going, man? Long time no see. We're not in the office anymore, so we haven't seen each other for a while. How's it going?
Yeah. I finally got rid of the quarantine beard just a few days ago.
Yeah,
Look at it all clean. Looks good.
I got I think I went about 2.5 months without without shaving, without doing anything, and then I let a mustache go for a day or two, but my wife was not too pleased with it.
This guy has the toughest job on Wall Street because he has to edit my articles. So I just have a little sympathy for him. But Chubbs, I mean, we got a lot of good content coming out of there. You want to come on today and talk about the content, see what our listeners like, and just tell us what the last couple months have been like here as far as writing and articles, editorial on the news.
Tell us what people are reading, because what our traffic's like.
Yeah, I mean, like many other business publications, we've just had record-breaking traffic every single month, almost every single week when it comes down to it. It's the old adage of if it bleeds, it leads in news, and when something bad happens, people want to read about it as opposed to something that's good that's happening. And it's been crazy how much people have just been eating up anything related to the coronavirus on our site or any of the sympathy plays that might have moved with it, whether it's Moderna, Gilead, even just some of the penny stocks there. All of them have just led to some record-breaking numbers. This isn't an article per se, but one of our top page since the beginning of the year is the best penny stocks under $1 right now. So I think like you've been reading in some of these places, a lot of people that aren't suffering too much from any kind of downturn or losing their job. They have extra money to play the market. And so Robinhood's getting, tons of new users. And I think they're all just trying to buy anything they can for cheap right now. And it's showing off not just in the stock moves, but also in what we're writing about.
Yeah, a lot of record number of new accounts at the retail brokerages, and traffic has held pretty steady, even though the market's come back. We're not as volatile as we were a couple months ago, but it's still hot, right? People are still hungry. Oh,
for sure, and then of course, obviously, there's also just the crazy headlines that we see almost on a daily basis, whether it's from the White House or from Main Street, like what's happened over the last week. And we're doing our best to cover that as we can. We're obviously kind of a smaller team here, but we're able to do. We pull our weight as best we can. I think you guys are well aware of that.
I'd be remiss if I didn't ask you about the stock you are an expert on, WWE. You are a wrestling guru. I don't know if you've been following it at all, but if you can give us like a 10, 20-second take on the state of their business right now.
Well, I think like I've said before, the stock is totally different from what the actual product is, and they laid off a bunch of people right before their last earnings report while this pandemic was going on. I think it was a few dozen wrestlers and backstage people. and they released earnings the next, a week later, and they had record-breaking numbers. So, they're losing subscribers on their network, but people don't necessarily care about how bad the product is. As long as they're making money from those crazy television deals, they've made $500 million from Fox and from NBC over the last couple of years, and that's going to be able to sustain them for a while. But much like the whole pro wrestling industry and every industry in the world that relies on fan interaction, they just had terrible luck over the last few months trying to do live shows with an empty arena. And they benefit from having a crowd there, that their talent and the show feeds off of having a live crowd, like you're watching a baseball game. So I feel bad for them and every other company that has to deal with no fan interaction like that. But I think from a stock perspective, I think they're going to do okay just because of the contracts they've already signed before all this hit.
Right. So how is this going to work? Like, you think about all the professional sports teams. I mean, a lot of them are tight budgets. The salaries, think about the baseball players. The salaries are very high. Obviously, there is some linkage in some of those that have salary caps, but for the most part, you've got a lot of fixed expenditures in running these arenas. And you think about the owners of these teams, and you're not going to have in the short term any revenue from the fans. How does that work? I mean, like that it sounds like a recipe, even with the WWE, it sounds like a recipe to lose a lot of money in the short term.
It's definitely going to hurt all of them, NFL, college football, whoever does go back to normal. Hopefully it's soon, but whenever they do. But again, I think how WWE benefits from their television contracts, that's what so many of these leagues get the bulk of their money on is ESPN, TNT Sports, CBS Sports, Fox Sports. It feels like every contract renewal, every 3 or 4 years, they get billions of dollars from them. So I think that's able to sustain them, so they don't fold like some of these lower level, minor league promotions are. But I don't think they could last more than a season without having their vendors and their fans coming through the turnstiles. But I think they can adjust for the near-term thing, but if this goes any longer than another season or two, which I think we all doubt at this point, but that's when I think that the actual worry of how can these leagues sustain will come into play.
Shubs, I'm being advised to ask you to move your face away from the mic. You're blowing it out a little bit too.
I'm sorry.
Okay. Any just final thoughts here, Shubs, on just the market and its reaction to news and what you're seeing as far as what people are caring about?
Well, actually, Dennis touched on something I wanted to bring up just before I came on about Tesla and Musk. We wrote an article over the weekend about how Tesla stock has moved with SpaceX launches over the years. Baird had actually a pretty interesting chart about how the stock correlates with a launch, whether it's positive or negative. And that story blew up for us over the weekend. And much like you guys, we talked to Ivan Feinseth from Tigris, who I think has been on the show several times. We talked to Mark Spiegel from Stanfield Capital, and they were just saying, it's ridiculous that the market is trying to play Tesla to SpaceX. But like Dennis said, we got a few emails saying, if you believe in Elon, you believe in anything. So if they can see any kind of positive correlation from Elon himself, they're going to buy anything that's related to him. And I think that's showing right now in Tesla. Well, it's always showed in Tesla, but even from a historic space launch like that, it pays off.
It doesn't make sense, but it also does make sense. So
exactly.
Sometimes the simple trade, again, we were calling the show, the simple trade that if that launch is successful, in all likelihood, even though SpaceX is a completely separate company than Tesla, the investors will come in and buy Tesla. And it's not a coincidence that Tesla's trading up 20 points here right now because of this successful launch. I mean, if that launch wasn't successful for whatever reason or got delayed again, Tesla stock could have been down today. So there is.
Yep, I think Mark Spiegel actually said that on the what was that last Thursday when the original launch was delayed or postponed. He said as soon as they put the announcement out, it fell $5 in after-hours trading.
There you go. So traders are trading trading Tesla as.
You can't trade SpaceX. Close thing to it is trading.
I wish they would make SpaceX public. I would like to trade SpaceX, but I guess we have space. Shubs, what's your thoughts on space? And again, you're seeing the same thing. Space is getting a big pop here today. SPCE, obviously nothing to do with it, but again, they're trying to put people into outer space as well. So a successful launch of this is good for SPCE as well, and we're seeing a 7% pop in that stock too. So maybe SPCE starts tracking SpaceX.
I also wonder how many of these are actual traders or if their algorithms just tied to all these things.
Oh, I think a lot of algos
Probably.
for sure.
Probably the latter. Yeah. All right. Jason Shubnell is the managing editor at Benzinga. He's also a resident wrestling expert. Shubs, thanks for coming on today.
Thanks, guys. And to all your listeners, if you guys, I don't know how often, your listeners are reading Benzinga.com or if they're Benzinga Pro users, but if you guys ever have any story ideas that you think are interesting to write about, or if you have any tips of something that you've read before, just shoot us an email at editorial@benzinga.com. And we'll obviously follow up with you, and we'll look into it as best we can.
All right. Thanks a lot, Shubs. That was editorial at benzinga.com was the email there. All right, let's wrap it up here. Thanks to our guests, both Chubbs and Michael Pachter. Thanks to all of our listeners and people in our chats. Please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Everyone have a great rest of your Monday. Joel and I will be back at 3:40. In the meantime, be safe and good luck out there.